Hello traders, and welcome to this live stream from Exness. I'm Michael Stark, Financial Content Leader at Exness, and I'm going to be presenting in this stream some information about recent important events that have happened, looking ahead to some of the important events that are coming up, notably the NFP this week, unusually, and also looking at some charts. And there should also be plenty of time both throughout the streaming and also at the end to answer all of your questions, both relevant to the topic and any other questions within reason that you might have. So I would encourage you please to ask any questions that you might have. And before we get started, by all means drop in the comments where you're watching from, what you're most excited about in trading this week, anything else relevant that you would like to share. We do read all the comments. We will, I think, hopefully have time to answer all of the questions in reasonable level of detail. So firstly, a little bit about me. I'm Michael Stark, Financial Content Leader, and I've been trading CFDs since about 2013 and investing generally since about 2007. I've been working for Exness since 2018. And I would just remind you that please remember throughout the stream, all of what I'm saying is just my personal opinion. It's not the opinion of Exness. It's not a recommendation to take any actual trades. It's just something for you to think about. Please always research your own financial decisions thoroughly. And be very careful at all times to manage risk. So firstly, what we're going to do is we're going to take a quick look at the client area and the analytical tools that's available in the personal area with Exness. So we can see on the screen here, we're in the personal area of Exness, and I would just remind you that this is a demo account. So throughout this stream, anything that we're looking at on the charts is not a real trade. It's a demo trade. I'm not risking real money, and I also recommend that you do not take anything that I'm saying here as gospel. Don't risk your real money without doing your own research. None of this is meant to be advice. So within the tab for analysis, which is called analytics here, you can find firstly analyst views, which takes a few ideas from Trading Central and gives an expectation for what might happen. That might be it goes up, it might be the price goes down, it could be the price goes sideways, and it gives some alternatives for traders who were to take this idea. It gives an alternative for buying if the preferred direction from Trading Central is selling. And you can also find here market news under analytics. Market news covers all of the major and quite a lot of the minor news as well that's affecting most major currencies and other things as well. So you can read through this to get a summary of the latest news and some of its possible effects on markets. And also within here, you can get the link to the economic calendar, which is available on the main website. Exness's economic calendar, I can let you in actually on, I think I can let you in on a little tidbit of a preview that this is soon going to be updated, so that's quite exciting. Hopefully within the next few months we should have a new version of Exness's economic calendar, so that's really exciting, because currently of course the functionality is somewhat limited in that it doesn't give you the expected and the previous and the actual results. So that's why mostly during this session we're going to be looking at Trading Economics. Trading Economics is one of the more useful sites for many traders to look at fundamentals, to look at data, because it gives you more or less everything that you might want to look at in the same place, and it also gives you fairly long-term charts of changes in major economic releases. So let's look at the chat here for a second. First comment, nice one first, is from Michael Pips FX. Let's mark attendance. Yeah, sure, you can mark your attendance if you'd like. If you find this useful, that's great. Yeah, nice one for being number one commenter. And then Sentongo Koleb says, I'm in Uganda. Welcome very much. And we have Joyce Gitao says, hello Michael, watching from Nairobi in Kenya. Welcome back, Joyce, nice to see you again. And we have Lucin Jokira 2469, good afternoon, watching from Nairobi, Kenya. Analyze dollar, yen, and euro dollar. Yes, we can do that. Welcome, Lucin. And yes, we will certainly analyze dollar, yen, and euro dollar. Yep. Definitely on the cards. But first what we're going to do is, before we come on to the specific request from Lucin, we will look at some of the important top level economic data that's come out recently. So as you know, of course, we've had fairly long, well actually the longest, I think, government shutdown in history from the USA. So we haven't had any significant economic data from the USA for actually quite some time. For things like inflation, especially, quite significantly behind. So it's going to be very important within the next few weeks to see how has inflation changed and also have jobs changed since for the last coming on 6 weeks, actually, we've been pretty much in a void. We've been trying to trade in the dark without knowing what any of these data are doing. So one very important factor, I think, to monitor here is that pretty much all of the economic releases that's coming from the USA after the shutdown are going to be at least somewhat less reliable than they would be otherwise. Because we always have some degree of bias in economic releases, that's unavoidable, but we also have the added bias in this case of recollection, in that when you get a survey, whether it's about jobs or about anything else, significantly after the time they want you to remember, you have to remember it correctly as well. So that's why I think we're likely to see significantly less reliable releases coming up in the near future. And I think we possibly are also going to see more volatility about upcoming releases. So the most critical release that we're looking ahead to this week, it's after just 2 days on Thursday, is non-farm payrolls for September. So that's quite delayed. That's more than a month delayed. It's about 6 weeks delayed. And I can say, this I would stress is just my opinion, I don't think the consensus for this is going to be very reliable. Consensus currently is 50,000, whereas the previous release was 22,000. So I think it's highly questionable whether we're going to get anything like 50,000. It might be significantly lower than that, but broadly speaking, I think that we're probably expecting it to be lower. But what should we do if it's higher? If it's actually higher than the consensus, then of course we need to be prepared to buy the dollar and possibly sell gold in that situation. Just that's probably not the most likely scenario, but still we need to remember that the reliability of key economic data is going to be at least a little bit lower. Then let's look at some specific pairs in a minute after we've just looked at FedWatch briefly. One of the very significant changes that we've seen within the last few weeks, within the last month or so actually, is the shift from almost certainty that the Fed is going to cut its funds rate next month on the 10th of December to pretty much parity between expecting a single cut and expecting a hold. And that's a very significant shift because in itself that's something that's broadly positive for the dollar and broadly negative for gold. When we move from this kind of certainty of loosening towards basically complete uncertainty, it could go either way based on this now, then that's something that gives at least slightly lower confidence to gold traders. And we can also see that that has at least some degree of knock-on effects into early next year. Of course, we're getting a little bit less reliable here with FedWatch when we're looking at March and later. That should be stressed, but certainly overall the expectations are at least somewhat less dovish than they were around this time last month. And actually even in March, at the end of the first quarter, we have a 17% chance of no cut by then, no further cut by then, which is not very likely of course, but still it's quite significant because of course that seemed to be more or less impossible a month ago. So that's something that we want to continue monitoring. And especially I would stress that we want to try to look at inflation on the 10th. So since the inflation for October is going to be on the same day as the Fed's meeting, that makes it pretty unlikely, of course, for the Fed to factor that into their decision, but it's still something that we want to be considering because it's likely that they will try to factor it into their decision for January. And equally, this Thursday's NFP I think is really important because however much it might be a bit unreliable, it's likely to be fairly unreliable, I think, the numbers, that's something that the Fed is going to be considering in the run-up to the decision. And some of the other important releases that I want to point out this week, and we can go into more detail about them if you want, but I realise it's not relevant for everybody, is British and Japanese inflation. So in the case of Britain, we're expecting it to go down at least slightly, having held pretty high above the target for quite a long time might give some fuel for the Bank of England to cut rates, whereas for Japanese inflation, we're expecting that to increase slightly. I mean, that's the summary expectation, is it's expecting to increase slightly. So that might possibly give some support for the Bank of Japan to hike rates. But, I mean, that's an ongoing intrigue about when that might actually happen. So it's quite a few question marks over that. So that's some of the really key releases this week. I mean, the key releases, the key release, of course, is the NFP, because we're looking ahead at that for its impact on the Fed. We're looking ahead at it also because we haven't had an NFP for quite a long time. So that's the really critical release, and I think there's something to be said possibly for not making any large positions, at least for instruments linked to the dollar in the run-up to the NFP. But of course, that depends on our personal circumstances and other things as well. So let's look briefly at charts, and let's start with the request from Lucin about dollar yen and euro dollar. And Julius says, Julius here from Ghana. Welcome, Julius. Thanks for being on board. And so firstly, let's look a bit at dollar yen. So as we said earlier, we were discussing a bit earlier about the delays to American economic data, and that hasn't really phased the dollar very much. I mean, some of the key fundamental factors that we're looking at here right now, I think, for dollar yen are the new Prime Minister of Japan, who seems to be generally pretty supportive of fiscal easing, although it's possibly questionable, let's say, to what extent that's actually needed in the situation. And we're also looking at trade wars. We've seen fairly significant contraction in the Japanese economy as a result of tariffs and trade wars in general. So, and overall, we don't have that much focus on the second two of the traditional havens. So the franc and the yen, not that much particular focus on them compared to gold. Much more focus recently has been on gold. So that's why broadly we can expect from a fundamental, simplistic, I would stress, fundamental perspective, and also from technical perspective, we probably expect that this uptrend is going to continue. Since we've seen the price make definitely 3 clear new highs since around the beginning of last month. So that's why we can probably expect, the trend is your friend in most situations. And I would also stress, particularly if we're trading this on the daily chart, this is the 20 SMA here in white. We can see that the price has tested that area several times, 1, 2, 3 clear tests, and this is a possible test. I would probably include that as a clear test. I would say 4 times, personally, just my opinion, I would stress. So that's likely to be an important dynamic support, at least until we get some kind of significant shift in sentiment. So we probably expect that the trend is going to continue upwards. Let's just zoom out to get more information on volume. I think it's probably not a good idea to be comparing volume from April, when we had Liberation Day and so on and so forth. It's not a good idea to compare the volume from then with now, because of course now the volume is going to be lower. But it doesn't seem to be particularly low overall, the volume, so that broadly might be supporting the trend. Just the main kind of question mark, I think, as to whether it's going to continue upward immediately. Was it asked that? Lucin, yes. Lucin is, we have pretty strong overbought signal from the slow stochastic. Not so from the Bollinger Bands, which are here set to 50, but pretty strong overbought signal from the slow stochastic. So that makes it kind of questionable, I think, whether it's going to continue upwards more or less immediately. We might maybe want to wait for another, or I personally, let's say, just my opinion, might want to wait for a retest of the 20 SMA somewhere around 154 yens approximately, and then see if we can buy in there when the price is not overbought. Also, ATR, maybe we can make that just a little bit clearer there. Just give me a wee second to make that clearer. Yeah, that's a lot better. Okay, good. We can see that ATR has declined pretty consistently since during the period of this uptrend, based purely on the price on the chart. So that maybe questions whether it might be losing momentum and possibly needs to retrace lower before moving back up. So one thing that we could do, and I would stress that this is not advice, this is just how I might possibly approach it, is we could set up a possible pending order around the area of approximately 154. So think, for the sake of demonstration, I would stress not a recommendation to trade, around 153.90, and maybe a realistic-ish target might be about 157 in the medium-ish term. And then setting the stop, I think, probably would be roughly around 152 approximately. It doesn't coincide exactly with one of the previous tests of the 20 SMA, but it's reasonably close. So 152. So if we check this, then we have an okay ratio. It's certainly not a fantastic ratio by any means. Possible profit of around $20 for a micro lot, and a possible loss of around $12.25. Possibly we could wait until we actually do get there, and we could get a better ratio for that trade. I would stress it's not advice. That's just it's meant for informational purposes only. And it's possible also to set a more aggressive target if you're happy to hold it for a bit longer. since we can see that the price previously, although it was for a while ago, it was last summer, the price had tested the area around 160-ish. So it's possible to see it moving up there. Just I think it's kind of questionable whether you get a move much above the highs around Christmas-ish last year. It's around 158-ish, slightly below there. So, but I mean, overall, broadly, I think the bias is probably towards buying. If you were to sell, if I was to sell anyway, it would probably be in the shorter term, and maybe I would I might sell from the current area, set the target roughly around 152 or perhaps slightly lower. And I think just the critical releases that you would need to monitor there, Lucien, would be the NFP, obviously, on Thursday, and then late on Thursday night, Japanese inflation. You get a big surprise from them, possibly invalidate the whole idea. So that's something really important to be aware of, right? And we also have another one from Lucien, right? So hopefully that answers you to some degree about dollar yen. Lucien, you have a specific question about that, please by all means ask. And we also want to look at euro dollar. Yes, we will certainly do that, don't you worry. An hour-long live stream, we will certainly talk about euro dollar at least a little bit. So, I mean, I think if we think purely, I know I've said this before, but just indulge me for a second. If we think purely about monetary policy, you would think that this should be lower. You think it actually maybe should be quite a lot lower than it currently is. But I think one of the factors behind the price being relatively high considering the circumstances is just sentiment. And another of the factors I think is uncertainty about how much is the American economy potentially weakening and how much is the job market in the USA possibly weakening. So uncertainty about these kind of macro fundamental factors makes people maybe somewhat reluctant to commit. I mean, overall, it does look to me like a downtrend since roughly middle of September, based on the pretty simplistic approach of just finding the number of new lows after the high that's been reached. So you could say possibly one, but definitely this is one, and this is two here. So possibly three, but certainly at least two. I think one of the key questions here, Lucien, is it actually going to be pushing below the 200 SMA? Because last time we had a test of that, which is the very beginning of the month, we can see that the price fairly strongly rebounded from that area. But then one of the compounding factors there is we were in pretty strong oversold based on the slow stochastic at the time, also clearly oversold based on 50-day Bollinger Bands. So in that situation, I mean, we're kind of widely, I think, expecting it to bounce, at least to some degree. So what happens when there's the next test, and sooner or later I think it will happen, what happens at the next test of the 200 SMA, where are we going to be in terms of saturation? We're very unlikely to be saturated in terms of Bollinger Bands, that's true, but slow stochastic we might see some change in terms of what that indicates. So I think that's an important factor that we want to try to monitor, these indicators. And this week we don't have any critical economic data coming out from the Eurozone, but of course we do have the NFP coming out on Thursday, which as noted before is likely to be quite unpredictable. So for me personally, I would probably not really want to trade this right now. But if I was to trade it, if I was feeling like, oh, I must trade this for some reason, then I would probably move more towards selling. And I would try to set a target initially probably around the previous low. So that's, let's say, around 114.8. And I would stress it's not live trading. This is just for informational purposes only. It's just an illustration of how you can use Exness's platform to set a good ratio. So that would give us a potential profit of around $11. So we don't have really that much scope to set a very good or very appropriate stop, in my view, because 116 would definitely be far too close. Whereas if you were to set it around 116.3, then I think we'd probably lose too much money relative to how much is... Oh no, that's okay actually, isn't it? Yeah. No, I think that would work. It could work. I mean, my preference wouldn't be not to do this. I would wait until after the NFP, but it's just an illustration of how we could potentially find a reasonably good ratio here. If we're setting this target roughly around the previous low, and we're setting roughly around the previous high on the daily chart, the stop, then that gives us a ratio of slightly more than 1 to 2. So that's fine. That's quite okay. I would just say the main question there is, of course, how close we are in terms of ATR. Fairly close. And also what's going to happen with the NFP on Thursday. So these are some of the big questions. Yeah. And hopefully that answers your question, Lucien, to some degree. That's some basic analysis of euro-dollar. And thanks very much for the questions. If you have anything else you want to be analysed, please by all means say so. I'm just going to read through the comments here a little bit. Official Rolem Nebi says, hello sir, I'm from UAE. Welcome, Mr. Rolem. Thanks for joining us. Senton Gokoleb says, which indicator on the Exness terminal can separate days and weeks vertical lines? That's a great question. I honestly never use that, but let's try together to see whether we can find it. What I usually do, which is good enough for me, I don't need an indicator to do it, is I just set on the canvas the grid lines vertical and horizontal in a contrast color so that you can actually see it. So that on the daily chart, we're separated into weeks of actual trading when the market is open. I mean, of course. Who asked that? Senton Gokolep. Yeah. We're separated into weeks of actual trading, whereas if we bring a lower time frame, let's say 30 minutes, then we're separating it into 3 hours with these lines. And you can fiddle about with the time frames. You can fiddle about with the colors to find something that makes you happy. And I think that's quite good. For me personally, that works. I wouldn't need an indicator to separate. I know that obviously there is a lot of people out there who hate the grid for some reason, and that's fine, no problem. If you don't want a grid, just turn the grid off. Pretty easy. But for me, I think vertical horizontal grid lines really, really helpful, just to help you understand more quickly about where are the round numbers and where are the opening and closings. I think it's really helpful. As for an indicator to do that, I honestly don't know the answer. Center and Gokoleb. What you could do, if what I've said doesn't answer your question, is you could maybe you can ask Andreas next week. Andreas will be streaming next week, and Kojo, I'm sure, will be streaming tomorrow. Or what we could do is, especially if you'll be here next week, is I can do some research about this. I'm just not sure. I'm not sure why you would use an indicator to do that. I personally don't understand why you use an indicator to do that when you can just use grid lines. I think that would be easier, and that's what I use, and that I haven't had any problem with doing it that way. But that's just me. I mean, in MT4, I know that in MT4 and in MT5 we can get period separators, but I should not show you that because I should be showing you the Exness platform, and also this is a Mac computer anyway, so MT5 won't work. But I don't think that there's equivalent on here. No. Yeah, no, that doesn't work. I know that some people obviously use these kinds of things. They use these like date ranges and price ranges, and they can get some utility about the utility out of using it. That's awesome. Of course, that's absolutely perfect. If that works for you, you can maybe experiment with that. But an indicator, it just doesn't seem necessary to me. And I'm also not sure which indicator you could get to do that. So I know obviously that's a bit of a useless answer, sent on Coca-Cola, but I'm trying at least. So you could ask Andreas, or you could ask Kojo if you'd be joining them. Yeah. So sorry about that, and it's not a very good answer. It's just not something. It's not really my area. So a question from Joyce Gitau, Ms. Joyce, asks, what's your take on Bitcoin, gold, silver? Yes, we can also certainly look at that. Ask her the big questions here. Yeah, so Bitcoin, we did a video about this yesterday, and I think possibly this channel is going to be established. But let's see. We'll look at some more details later. So fundamentally, let's start from that point, right, Ms. Joyce? Let's start fundamentally. No really big changes recently in terms of what's going on fundamentally. One of the main, I think, possibly big changes that we could bring up is indices. Traditionally, Bitcoin has a very strong correlation to indices. I actually kind of want some indicators on here. Can I do that? Sorry, just give me a wee second here to put some indicators on this. I really wish we could use MT5 for this, but that's okay. Right. So yes, let's look at S&P 500, one of the main indices, and it's not corrected, but it's like retraced somewhat from the highs recently, and overall there is some kind of chatter, rumours about AI bubbles supposedly, and all this kind of stuff that's certainly affecting sentiments, affecting markets. And usually Bitcoin has, to some degree, a correlation with major indices. And I think that seems to be what we're looking at now. And so I would stress, of course, right, this parallel channel is not very well defined, right? And it's also just my opinion. Just when we see, I think it's a helpful technique when we see a new possible trend developing for cryptocurrencies, especially Bitcoin. It's really good just to like pull out these tools here on the left, right? All these various lines you can draw, pull them out, just fiddle about with them and see what happens. And I think that might work in this particular case, in that we've got the so far the upper boundary of the channel has been more or less respected. Lower boundary is a lot vaguer, I would stress, of course. But I mean, if correct, then we can maybe expect sometimes next week a test below 90,000. I just think it's kind of questionable. I mean, more of an extended test below 90,000. I just think it's kind of questionable to me, like, what's the actual rationale for a kind of long-term sell on Bitcoin from this area? Like, if we're thinking about a long-term sell for Bitcoin, we would want to do that, I think, a little bit higher. Or we would have wanted to do that a little bit higher. Since we don't have any like really big obvious shift in fundamentals or sentiment. But let's look at the indicators as well. I mean, obviously, I would just stress that a saturation indicators, that is to say, the saturation aspect of Bollinger Bands and slow stochastic, are notoriously unreliable for cryptocurrencies. Doesn't mean we shouldn't use them. It just means that we should use them with much greater caution than we would with pretty much any other instrument, right? So that's one factor. And I think another important factor is that volume does not support this downtrend at all. From my perspective, at least, right? We can see that volume tanks from the beginning of last month. And okay, yeah, we have some of an uptick during, but you would kind of expect to be seeing higher volume when you have a candlestick of that size, yeah, on 10th of October. You're obviously going to get somewhat higher volume because people are going to jump in there. And the rest of the time, obviously no support from volume, to my mind. I mean, it's really, really low, the volume for Bitcoin compared to how it has been in the past. We can also consider futures, and we can consider centralized exchanges if you'd like. And I mean, overall, yes, there is some more there's some more focus recently on centralized exchanges and the volume they're going up, which can be a sell signal. That's one factor. I just think for a long-term trade for Bitcoin, you probably want to be selling in a bit higher. I would anyway. That's just my opinion. It's not advice. It's not a recommendation, of course. So I would probably look more towards buying currently. I would just probably wait until after the NFP. Definitely for Bitcoin, and almost definitely for other instruments as well. Because it might be, if we do get a particularly weak NFP, which I think is certainly very possible, we could get fairly strong bounce from around 90,000. Particularly if we get more, we get some kind of bounce for indices as well, or if we get some kind of positive shift in sentiment. So that's something I want to keep looking at for. Wouldn't personally do anything for Bitcoin now. Doesn't mean that you shouldn't. That's just my opinion, right? So Joyce is also asking about gold. And I think also, I mean, the situation is kind of broadly similar to what we had at the beginning of the month. You know, at the beginning of the month, if you remember, if you're watching the market outlook, we can look back at that later. We had a market outlook in that week around 6th, 7th of November, expecting or giving the idea, let's say, sorry, not expecting, giving the idea that gold is going to move up. It's going to retest the area around 4,200. Fully accurate. Nice one. It's great when you get it right. And it's retraced from there. So I would just say, like, this seems to be 4,200 seems to be really important. I mean, candidate for a potential resistance in the medium term, because it's a nice round number, right? And that's number one. And also because we have this like pretty clear doji, which has been pretty clearly acted upon, relatively large up candle, and then on the 13th you've got this doji, not a long tail doji, just a default doji, and then pretty large move down the day after. So pretty much, to me anyway, seems to be more or less confirmed. We're not looking immediately for the price to go above 4,200. But then, is it going to push immediately much lower than this? I don't know. And I would say, personally, I really want to see what numbers we're getting from the NFP before doing anything about this, because we're in this very, very narrow, can we make that a little bit bigger? Yeah, just about inside this very narrow value area between the 20 and 50 moving averages. 50 moving average is central one from the Bollinger Bands, I mean. So whether you actually want to sell here, I mean, I personally would definitely not consider selling from here. I mean, I might be more inclined to think about buying, but again, just would not do that before we get that critical release, the NFP, in 2 days. Just wait for the time being. No position is a position. Bit of a cliche, but I think really helpful for me, at least, to help me to avoid losing money on stupid trades. Not that this would necessarily be a stupid trade. I just think in the short term, probably the bias would be more towards buying. The question is just like, what happens if, and I would stress it's a fairly big if, what happens if you get a really positive NFP? Quite possibly this is likely to be going down. I don't think that's very likely, but I mean, we don't want to be trapped in a buying position for gold around this particular NFP, because what happens if it comes in at 100,000? It's a nightmare situation in that case. You're frantically trying to close it as quickly as possible, because it's probably going to tank, at least on the lower time frames. So I mean, I personally would be inclined just to wait, with an overall bias towards buying. We can talk a little bit about monetary policy specifically on gold if you would like to, but I think we mentioned that quite well at the beginning. And silver, I actually haven't looked at that recently, honestly, so you might not get anything very useful out of me for silver, Ms. Joyce. But the situation, I think, is pretty similar to gold overall. I mean, the chart is quite similar, and silver's fundamentals, okay, it's used more in manufacturing and so on, so it's more vulnerable to trade war. That's true, yes, but trade war right now is not really something that we're talking about very much. So don't think the situation for silver is really very much different from gold. I mean, one possible exception to how both gold and silver, I think, are different from Bitcoin in a clear way is volume, because the opposite of what has happened for Bitcoin has happened for gold and silver since basically the middle of last month. We've seen volume increasing. Volume spiked. It's gone up, actually spiked quite a lot. Since around the middle of last month, it's gone up quite a lot. So, I mean, when we have this situation of much higher volume relative to what we had in September, but no very clear direction over the period of volume higher, then we can see that volatility is increased. And we also, I think, probably expect any breakout when it does occur, it might be stronger, since all of the buyers or all of the sellers are fairly likely to start getting exhausted around the same time. That is very speculative, I would stress. It's just one thing that sometimes we can see in that situation. But I think for both gold and silver, Ms. Joyce, my personal opinion is I would just wait until after the NFP. Wouldn't do anything about them for now. But that's just my take as a non-scalper. As a scalper, of course, we look at the low time frames, and we try to see, especially around the NFP, if we've got nerves of steel, we try to see can we jump on anything happening here. So hopefully, Ms. Joyce, that answers your question to some degree. You want to know more details about anything, please by all means ask. Right. So Wright Mutala 68 Wright from Zambia. Welcome, Mr. Wright. What's your take on gold? I think we've covered that. I think we've looked at that. But if there's something specific that you would like to know about, right, please let us know, and we can certainly cover it from a specific angle. We could look at lower time frames. We could look at higher time frames if you want to. I am Julius. Is the pound dollar going to move like the euro dollar, as you have explained? I think possibly, but I would say just the very, very big caveat there is, who asked that? Julius, right? Yeah, the very big caveat there is we've got the British budget coming out next week. And that is going to, I think there's increasing indications that it's going to be a damn mess. Excuse my language. Because the government right now is totally embattled in the way that European governments mostly aren't. What's actually going to happen around the time of... It's not on the front page, that's strange, yeah, because it's talking about asylum and everything now. But basically, are they actually going to cut taxes? Are they going to hike taxes? Are they going to leave taxes the same? Or are they going to introduce a raft of small taxes on loads of different things to try to balance the budget? Well, I don't think we know for sure, because there's lots of contradictory news coming out. And okay, in the case of taxes rising, then maybe you might expect some kind of short-term bounce for the pound, because it means the government's sticking to the fiscal rules, right? But the counterpoint to that, which I think is very important, Mr. Julius, is well, if they raise the taxes, obviously they strangle the growth, because already
the taxes on the middle and the higher earners in Britain are extremely high relative to other similar countries, that is to say. So, I mean, it's going to crush the growth, it's going to crush spending in the longer term if the taxes have to rise further. So that's obviously quite negative for the pound in the medium to longer term, even if it means that the government can close this 20 billion or 30 billion or whatever black hole in the budget. And how the budget is actually received. I mean, to what extent the backbenchers in the Labour Party interpret it and receive it. So I just think that's a big, unless you're like really super keen on British politics, I'm actually not. It's just at specific times that I get more keen on it. Unless you're really keen on British politics, Mr. Julius, I think this is just kind of a wild card. Like, you need to see what's actually going to happen. How is the market going to react to the budget? Should be on the 26th. So that's a critical factor that I think you have to monitor, which is, of course, doesn't have any equivalent for the euro. And British inflation tomorrow. Let's see, because right now we're focusing on politics. We're talking all about leadership challenge and reform of asylum system and so on and so forth. The Bank of England is still there, and it's still broadly looking towards cutting rates. And annual headline inflation is at 3.8%, which on the face of it, disregarding the context temporarily, on the face of it seems absolutely insane. Yet, people are expecting inflation to go down. So if we see lower inflation tomorrow, and especially if we see 3.5% or lower, which I think is quite unlikely, then we're probably going to get much greater likelihood of the Bank of England cutting, even though traditionally that might be kind of questionable. So while, yes, if you look at the chart, zoom out a little bit, you look at the chart superficially, they do look somewhat similar. Yeah, absolutely, they look kind of similar superficially. I just think there's a lot more scope for, if things go wrong, there's a lot more scope for the pound to go really far down, potentially. It just depends very much on the data, and it depends very much on the budget. Equally, if somehow things are received positively, if you get inflation broadly in line with expectations, and if the budget is received well, which I think is kind of unlikely, but you never know, maybe it'll happen, then perhaps the pound might gain. I think there's so much influence from politics and data here, Mr. Julius, that it's kind of difficult to see, what are we doing here in the medium to long term. I mean, if we consider it purely on technicals, just only thinking about technicals for the time being, I think that selling seems to be pretty favourable. It seems to be, to me, more favourable than buying. Because here, I think also it was questionable whether this is a new low, but this certainly is around here, right? And this is also certainly a new low. And we haven't had a clear higher high here, and the price seems to be also very, very reluctant to push back above the 20 SMA. So that's why I think I would probably favour selling if I had to do something about this. Just stress central point here. Wait for the budget. Really want to see if I'm going to be swing or position trading this. Want to see what happens with the budget next week. How does the government fare with that? Does the Prime Minister survive? Perhaps even. And tomorrow, what's happening with inflation? Are we going to get something broadly in line with the consensus? So I would say the simple answer is no. To Mr. Julius's question, is the pound dollar going to move like the euro dollar, as you have explained? I think the simple answer is no. I think definitely not. But how is it going to move? It really depends on what's going to happen with these important upcoming news and data. So hopefully that answers your question. I mean, if you do want to talk more about British politics or British economy, then we can absolutely do that. But I realise, of course, that's not necessarily very relevant for everybody. So hopefully that answers your question to some extent, Mr. Julius. Yeah. And Joyce says, thank you, Michael. Yeah, that's fine. You're very welcome, Joyce. Hopefully that helps you to some degree. So if anybody has any other questions that you would like to talk about, then let's go. Let's do that. That would be great. We had some very good questions last time. And otherwise, I think possibly some of the things that we could be looking at is we just do a brief kind of... I wouldn't say analysis, but I would say maybe overview of the situation of GDP and the situation also of jobs in a couple of major countries. So yeah, I think we do definitely want to look at GDP for USA. First and foremost, because the ones for last quarter have of course been delayed a lot, given that we had the government shutdown, longest government shutdown ever, and we're looking forward to see what are the numbers going to be. But I think broadly, third quarter GDP at 3% seems to me to be very, very questionable, since we have a fairly significant input into GDP from jobs, and we can see that overall jobs have worsened a lot. And the USA unemployment rate has gone up, and NFP itself has been pretty consistently lower than the average over the last several years, since early summer, late spring and early summer. So that's why I think we can expect a pretty big negative impact from jobs on the next GDP release. But of course, we had from Q2 a much better release than expected, in that both of the other estimates, like after the preliminary, both the second estimate and the final figures were revised higher, which is actually really quite unusual. It's not very common to see that happening. Just don't expect to get that kind of positivity this time. So that's due out on the 26th, which is going to be next week on Thursday, I think, right? Wednesday. So let me see if I've put the calendar, sorry. So that's like a really important release that we want to be trying to monitor next week. Yeah, Wednesday, sorry, not Thursday. Wednesday next week. PC and GDP coming out at the same time. So next Wednesday, really important day. I mean, I'm sure Andreas is going to be talking about that in more detail than next week's live stream. We're going to be looking at these data, but that's just something to be aware of further ahead. I mean, broadly, it looks like, okay, we had a great quarter in terms of American growth last quarter. Sorry, not last quarter, the quarter before last quarter had a great quarter in terms of growth, but I think third quarter is going to be at least somewhat less positive, let's put it that way. And I mean, I don't think we're necessarily looking very closely at the rate of unemployment in the Eurozone, because it's not really entirely fair to compare American unemployment with Eurozone-wide unemployment. Just given the wide variety of national policies and, you know, significant divergence between countries like, let's say, I don't know, Greece or Portugal or something, with Germany in terms of unemployment, whereas the USA is, of course, all one country with, you know, one federal government. So that's one factor why, I mean, I don't think generally we're going to be looking too closely and comparing directly in terms of employment, but with GDP I think we probably can, to some degree at least, and say that overall definitely looks like growth in the Eurozone is a lot weaker compared to the USA. We also don't have that interruption from any kind of government shutdown. So pretty recently we've had GDP from the Eurozone for the third quarter, which was that was the second estimate, and in line with expectations. So I mean, it's pretty lukewarm, but at least it's not negative. It's just something that's it's questionable, I think, exactly what the American equivalent release is going to be, but we want to try to compare that, and we're not expecting any big surprise from third quarter GDP, the final release from the Eurozone, which is happening early next month. So let's see what happens there. Just not expecting any kind of big surprise from it. But broadly, I mean, as I was saying earlier, if we're just looking at the heat map, we're just taking it at face value, which I know we don't usually like to do that, but can take that. Just indulge me for a second. Let's do that. Then it certainly looks like the economy in the Eurozone is doing a lot worse than the USA in terms of worse growth. And also in terms of worse employment, although there's some questions about that, whether that's useful or valuable. But where the Eurozone is doing better, in terms of the targets anyway, is inflation is pretty close to target, Eurozone-wide inflation rate. So that's what I think probably suggests, at least, that the ECB might be done this cycle of cutting. It's probably not that likely in the near future, at least, to get more changes in interest rates in the Eurozone. Might remain stable for some time. Or at least it's very unlikely to be a cycle. Whereas definitely, I think, although the Fed is now not by any means certain to be cutting its rates next month, it certainly looks like in the next quarter, sometime in the first quarter of 2026, it's quite likely to be doing some cutting. When I think we might get some hint on 10th of December at the Fed's next meeting, we might get some hint on that. So that's really important release that we're looking ahead to. And we can also briefly talk. Let's just talk a little bit about AI bubble, because what's a bubble and what's not a bubble? That's kind of a question.
And I need to go US 500. And I mean, of course, the air bubble is going to have a bigger impact on the Nasdaq compared to the S&P 500. And I think to some extent you could argue that there's a broader tech bubble in terms of like value investing, inverted commas, whatever that means. There's been, that is to say, in terms of ratio of price to earnings and dividends and so on and so forth. There's been a tech bubble for quite some time, but then I think the question mark over that is many of the people who are buying shares like Nvidia. Or buying in pretty much any other tech shares, not buying it for the dividends in the first place. So this kind of question is more or less irrelevant. And generally speaking, we expect that when you're getting very high valuations developing in a certain newish sector, and we can say AI is essentially a separate sector in some respects, then these are not going to be achieved, but they might not be missed by very much. So that's why I would say that a lot of this stuff is kind of speculatory. You know, if we go to the For You tab on X, not sure I would recommend that to many people, but if you were to go to the For You tab on X, you can see all sorts of... you probably don't need to scroll very far to see somebody talking about AI bubbles, so maybe I need to scroll a little bit further. But I mean, if you go to various news sources, they'll be talking about like how currently we've got a sell-off because people are worried about AI bubbles, and we have various comments from major companies saying we don't know what's going to happen, and they don't know what's going to happen. So, well, I mean, it's kind of interesting to read this. I think let's cut to the chase here. I'm not sure what you actually trade as a trade of CFDs if you think that AI is in a bubble. Because I mean, recently at least you can't trade Nvidia as a separate stock. As an individual stock, I mean, you can trade it as part of the because it's so volatile. You can't trade it as, but you can trade it certainly within an index. And I think it's, as far as I know, you can trade it just with slightly lower leverage currently. But I mean, for me, like in the last several years, I just really wouldn't go very near Nvidia as a CFD. That does mean that you lose some money, of course. That's true. But I mean, it also means that you can avoid getting trapped in some not very good trade. So I don't know, honestly don't know what I would do about trading Nvidia right now. But I mean, with indices, if you're a trader of CFDs, I think there are potential opportunities to sell if we start seeing lots of negative news coming out. We start seeing big down candlesticks, you know, much like during COVID, just probably on a lesser scale, I would expect. Then reasonably good opportunity to be selling. But long-term buying for indices as CFDs, maybe you might want the price to be a little bit lower than that. That's my 2 cents. I don't think it's really a good idea, especially as a trader of CFDs, to speculate on when the bubble might burst or really to what extent it is a bubble. We just kind of need to be prepared to react when we get and something that actually happens, and there's something that we can react to as traders. Different in that respect from how we would approach this situation as an investor. As an investor, I mean, I think as an investor you would probably approach the situation by not buying more tech stocks immediately, and possibly holding on to what you have until maybe it becomes a bit clearer what's going to happen next. So I mean, I think that's about it for the particularly interesting things that we want to talk about. I think for that, but if you have any questions in the meantime, that would be absolutely great. If you have a question, so critical data that we're looking forward to this week is the NFP. Really important release that which is also very, very unpredictable. For Britain specifically, looking at British inflation tomorrow morning, early GMT. Fed's minutes might be kind of interesting, but I don't think it's going to be. I don't think it really is going to account for. It's not really going to account for how does the government's reopening and an upcoming data affect things. So maybe not something that's super important. Just primary focus on the NFP. And then next week we're looking at personal consumption expenditures. We're looking at American GDP as well. Very important releases to be aware of. Maybe not so much European Eurozone inflation, but at any rate, Andreas will be talking about those hopefully next week. And also Kojo. I think probably Kojo should be live streaming tomorrow, I think. I'm not totally sure, but if you've got notifications on, then you should be aware as soon as that starts. Yeah. And as for what I would actually do this week, after the NFP, I would try to react on the chart of gold and also chart of Eurodollar.
pound dollar, I'm not really mad on doing anything much about that right now, at least. But so I don't know. And yeah, I mean, pound Kiwi dollar, that's something I constantly have running to see what is it going to do next, because that's quite an unpredictable one. Bitcoin also watching, how does that interact with the how does it interact with this? I would stress it's just a fairly roughly drawn channel. And for indices, looking to see if there is any kind of negative news coming out related to AI or bubbles or anything like that. Trying to jump on and see how low it's actually going to go. And oil for the moment is not really very interesting for me. If anybody would like to analyse oil, of course that's fine. Please ask a question. But for me right now, I'm not. Oil is not super interesting. I'm quite happy just to focus on other instruments for the time being, at least. So if anybody's got any questions, that would be great. You have anything in particular you want to know a little bit more about, that would be very good. But in the meantime, what I can do is I can talk a little bit about Exness's YouTube channel. So if you want to get reasonably regular analysis and also usually a fairly specific idea for a trade, I would stress just an idea, not a signal, not a guarantee of success, is you can tune into Exness's weekly market outlook. So the latest idea was for CME stock, and we should have another one coming out tomorrow. And you can monitor this. You can also check the success rate. There's various places where you can check the success rate of the market outlook, and that's possibly something you can do. I should also plug a podcast, Trading Talks, where we go a little bit deeper into various concepts that are relevant for traders. Comes out every week on Thursday. And you can also follow us on X, formerly known as Twitter. So this is me, M Stark Exness. You can follow me on here, and also various of my colleagues, the market strategists and the trading specialists, are here and accessible on X. They post in quite a wide variety of different languages. So you can follow these guys, you can follow me on X, and you can get more kind of regular insights there if that's something that's interesting for you to do. How does... Yeah, okay, great. Yeah, so we've got a question from Joyce. Mrs. Joyce asks, how does FOMC minutes affect the Forex market? That's a great question. Usually what it does is it helps to solidify, or it helps to decrease the likelihood of certain things happening. And basically how we approach the minutes from the minutes from the Fed is to look and see between different issues of the minutes what's changed. Has there been any significant change in mentions of things like inflation? Has there been any significant change in how they view the overall development of markets? This sort of thing. In my opinion, and I would stress this is just my opinion, Ms. Joyce, is not necessarily very helpful to read all of the minutes in fine detail. If that's something that you want to do and you find interesting, fine, go for it, obviously. But I mean, it's like about 20 pages of like really quite dry academic writing. You're not going to have fun reading the whole thing, let's say. And especially now, you've got tools like ChatGPT, which I'm not recommending ChatGPT, but I mean, you've got various large language models, right, that you can use to summarize this. And you've also got various summaries that people have written online. So you don't necessarily need to read the whole thing. But one of the main things that we're looking at here really is about how is there a significant change from one edition to the other edition, and that might indicate that there could be a change in policy coming up. And actually, if you want to know more, I think there should be a reasonably good article about this on Exness Insights. How am I going to find that? I don't know. And we did have a pretty good. I'm not sure whether this has a functional search. Maybe it'd be under deep dives. Just give me a wee minute, everybody, please, Ms. Joyce especially, just to see if I can find an example of. Yeah, I mean, I'm not sure it's really going to be under central bank's announcements, is it? No. I mean, it'd be somewhere around here. On Exness Insights, I don't think it'll be under divergence either, right? It's not under divergence. Sorry. I mean, there is an article about this that goes into more detail. I'm not going to. Forward guidance is actually one possible option where you can get some information, but that's not specific to the minutes. That's more specific to this. It's more specific to the dot plot. But you can read a little bit more about that there, and you can experiment. I mean, my approach to the minutes is generally just like kind of scan through it quite quickly. So when you get the minutes coming out, and I think the next minutes are coming out on tomorrow. Yeah. So what I would do is just open up the Fed's website, right? So federalreserve.gov. Right, and then just get to the PDF when it's out, and then just like Control F, for example, inflation, or it's Command F on a Mac, and then you just read about what do they think is happening with inflation, right? And you might also say, I don't know, jobs, no jobs, right? Labor, American, yeah, so something like that, yeah. And then this is like kind of the key meat, really, that you really want to know about. And that's a lot quicker to do it that way compared to reading through the whole thing. And I think also it's a lot more reliable, it's just my opinion, to do it that way than to feed it into ChatGPT or something, because ChatGPT often doesn't really understand what's important for us as traders unless we prompt it very, very carefully. So that's just my take, yeah. Hopefully that answers your question, Ms. Joyce, to some degree. JTK Record says, when is the NFP? Yeah, next one is after 2 days on Thursday. Unusually because we've just had the shutdown. So I think that's a really key release. 1:30 GMT on Thursday afternoon. Really, really important release. So we're just waiting to see, is the consensus reasonably reliable? I think it's probably not. And how is the market going to be reacting to that? Very important release. And then I think we should probably have the next one as usual in early December. Yeah, double NFP in early December. That's what's currently scheduled. So NFP for October, and also the as normal, the NFP for November on 5th of December. But the one for October currently scheduled. Sorry, the one for September, is currently scheduled for Thursday, so that's after 2 days. Yeah, so looking forward to that. GTK Records. Yeah. So if anybody has any more questions, please ask them. You want to look at any other charts? You want to look at? You want to discuss any other fundamental factors? Any general questions about trading? Please by all means ask your questions. Otherwise, if there's no questions, then just plug once again what I was plugging before. The Market Outlook, great weekly video where you can get an idea for a trade. It doesn't have a 100% success rate, I would stress, but it certainly has a fairly positive success rate and something to do your own research about and to think about to inspire you, possibly. Trading Talks, weekly podcast, which is quite good. Don't necessarily need to watch the video, you can just listen to it, often get some insights there. And various people from Exness, analysts, market strategists that you can follow on X. And my X handle specifically is mstarkexness if you'd like to know more there. And as for the next live stream should be I think should be tomorrow with Kojo, but the next live stream between me and Andreas should be next week with Andreas. So next week Andreas should be same time, doing a similar sort of thing, and he'll be focusing, I think, specifically on American GDP. Yep. And JTK Record says, does Exness have deposit bonus? No, we do not have a deposit bonus. Because the long story short, Exness views that as being unethical, and it encourages people to trade too much and to trade before they are ready to trade, or to trade when they shouldn't trade. So no, there's no deposit bonus at Exness. What you can do is you can get Exness dollars. That is not my area, and we also don't have enough time to explain it, but very basically, if you're a high value client of Exness, then you can be credited based on the amount of trades that you make. For more details about that, you could speak to your account manager, but you should be able to get plenty of details in the personal area if you're eligible for it. But short answer is JTK Records, no deposit bonus available at Exness for ethical reasons, basically, is the summary. Okay, and I think that's about it. So thanks very much everybody for joining the stream. Hopefully you had a good stream, and see you again next week. Hopefully Andreas will be here at the same time. It's 11 o'clock. It's 9 o'clock GMT, 11 o'clock GMT plus 2. and he'll be talking about similar things. He'll be talking about key data, and both past and upcoming. Giving a review of the NFP, which is happening on Thursday, and be talking also about American GDP, which is coming up next week on Wednesday. And I think Kojo also should be streaming tomorrow, as far as I know, but I'm not totally certain about that. You will be notified about it before it happens. And please check out Market Outlook, check out Exness' other videos on YouTube, and give us a like. That would be great. Yeah. And if you've had a good stream, then I don't know, leave a comment saying thanks, good stream, or something like that. That would be nice to encourage us. And hopefully see you again. I personally will see you again in 2 weeks, and Andreas will see you again for the stream next week. So thanks very much, everybody, for joining from all the various different places you joined, and thanks for some very good questions. Had some very interesting questions as usual, and hopefully good analysis. And last thing, please remember that nothing that I've said here is investment advice or trading advice. I'm not recommending that you do anything. You always need to make your own informed financial decisions, and be sure to manage risk at all times. So thanks for joining, and hopefully see you again soon. In the meantime, happy and responsible trading, I hope.